All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and it is Thursday, April 25th, the day of the football draft for tonight. I cannot wait. I'm going to be going out a little bit later and watching how bad the New York Giants screw up the draft. I'm just kidding. It seems like they do it to me every year. So I've got the expectations pretty low. I think we picked number 6. We've got several picks. But anyway, let me get to the market action for the day. Pretty crazy market action. Qs were up 40 basis points, so they're now down after hours because of Intel. But the separation that's been going on between some of these major indices is pretty crazy. The Dow, I don't really talk too much about the Dow because it's price weighted. If you're not familiar with price weighted, what that means is there's only 30 stocks in the Dow, but price weighted means in very simplistic terms, every each one of the 30 names, basically just one share goes in to the Dow. So whoever has the highest stock price will be the biggest weight, which is not the best weighting scheme. So if you have a stock that's in there that's $1,000, and then you have another stock that's trading at $10, which is not how the Dow works, but it really can throw off the performance based on what the one share of the stock that's $1,000 does, right? If that name drops 10%, it's going to really move the whole index. And I think that's kind of what 3M did today in the index. So it is very, very much a biased index. But anyway, I didn't really want to go off on a tangent about that. What I really wanted to talk about was IWM and the Qs. This is, I don't think I have this chart up anymore, but it's a pretty interesting relationship. If you look at, I apologize, I've got a lot of different screens up, but that's not one of them. IWM over Qs. So if you put IWM in the numerator and Qs in the denominator and chart these two, we were talking about this chart earlier in the room. Over the last 10 years, and that's a 1-year chart, that's a 5-year chart. Man, just the small caps. And you could come up with reasons for this. The banks are the biggest weight. Actually, financials in general are the biggest weight in IWM. I guess you could talk about that. But, tech has been the big outperformer. Now, there's not all tech that's in the Qs. People confuse that. But man, this has been going on for a while. This is the maximum relationship since these ETFs have been around, I guess. I'm surprised that they've been around that long, but in any event, you could see this relationship that's been going on with IWM. But yeah, it continues to underperform. It just feels like there's something not right with the way that the small caps are underperforming, and they've been doing this now. If we look at this versus SPY, don't worry, I'll get into the earnings too in just a second. There's IWM versus SPY. Right, this continues to kind of trickle around the December lows of this ratio. So again, I really like when IWM leads. It feels like the wind is at your back, but we don't have that going on right now. And it seems like they're the ones, whenever there's a tiny bit of volatility, because we really haven't gotten much volatility in the last couple months, but it seems like IWMs are the first to kind of go down. So Amazon, what's going on with Amazon here after hours? They crushed their numbers in terms of their EPS. 709 versus 472. I don't know. I didn't read to see why that number is so high. But remember, with earnings, it's all about the guidance, right? So their sales were right in line with expectations. That's that big red line on Bloomberg. But if you look at their guidance, right, their second quarter net sales, 59.5 to 63.5. You could drive a truck through that market, by the way. Estimated 62. So if you do the math and you add 59.5 plus 63.5 divided by 2, you get 61.5, which is way below the estimated, what they were supposed to be estimating for next year. So I don't know. What are they lowballing their number for the next quarter, giving themselves some room? Probably a little bit of that. I would wait and see what the analysts say. Their earnings call also starts at 5:30. 5:30 their earnings call starts. So you can listen to that before the NFL draft starts. Some other names. So it's up a little bit. The call spread that I did not do a spread. I want to talk about this just for one quick minute, and then we'll go over some other results. But I think it surprises me how many traders do not. And I'm not calling anybody out or anything like this. I'm trying to help because I see a lot of traders. It seems like all they trade is on the Twitter sphere, right? It's just calls and puts. Why not trade everything that's in your arsenal? Call spreads, put spreads, just stock alone. We spent a good portion of the aftermarket session, which I do with all members as the earnings are coming out. But we talked about delta hedging for about 15-20 minutes. You have to know if you're trading options and you don't know how to delta hedge. And I think I said this in the call last night too. You really should not be trading options if you can't figure out how to delta hedge. And there's nothing. And if you don't know how to do it, by all means, ask me. I'm happy to explain it to you. But if you don't know how to hedge in the after hours, because I saw a comment the other day from somebody saying, it's pointless to play earnings because there's big implied volatility drop. So which is true, vol crush. But design your earnings play so that it's a call spread or a put spread. Sell some premium. Go. If you do a call spread, it's a little bit more defensive. And they have great risk to reward. And I see that sometimes when newer traders come into my room, they're like, "Well, I'm not approved to do spreads." Like, what do you mean you're not approved to do spreads? That should be something that it's a lot more conservative of a trade. You could basically think about where the stock could get to on a chart, and then you could do a call spread, and the risk to return setup is very attractive. And it's a better way, in my opinion, to play earnings names. So if you guys are not doing that, then you need to do a little bit of education to kind of learn and get that footing. But I see incorrect comments all the time about, if you structure the trade correctly in a call spread or a put spread, you can make money and you're not going to lose because of the vol crush because you're selling a call too. All right, so I'll move on. But it's so important, and I think when I hear that people don't know how to do it, it makes me shriek. It's like, or when people say incorrect things, and then I see some people back it up, and they're like, yeah, I don't play earnings at all either. It's such a waste. Sure, I mean, but anyway, we did a whole webinar on earnings and how to play them, I think, a better way. Than just you can't go. I personally hardly ever go outright long calls or puts for earnings because of that vol crush. Intel, so big move down here. Nice play by a couple traders in the room today who bought some puts in Intel. We did see some semi puts that were fine. This is something that we haven't seen in a while, but I kind of took note when we saw some puts that were being bought in the SMH. If we just look at sweeps. You could see that there was some sweeps, ones that were bought for tomorrow's expiration. Because when a name like this, even though I don't think Intel is one of the better names in the group, it still brings the group down, especially when they say comments like, they made comments about memory chips, which is going to bring down Micron. But Intel, they cut their forecast. So pretty ugly numbers. Which I think this group has gotten way ahead of itself. There was a couple names that were reported the last few days, and their numbers were not great, and the stock was still going up. And I was like, well, I can understand that months ago when the stocks are cheap, but the stocks aren't cheap anymore. They're expensive, or have gotten more expensive. So I think this group needed to kind of come back to reality a little bit. Let's go ahead and we'll talk about a few other names that reported. We'll just go through. And I want to keep the video shorter than normal because we did do an aftermarket session and I will lose my voice. Starbucks is coming back. MAT reported they're up a bit. Ford had good numbers. They're up to over 10. Juniper reported. I didn't see a ton of really blast off names like we saw last night with Facebook and ServiceNow. By the way, ServiceNow trade that we did yesterday, basically a nice. I don't want to say a home run, but one hell of a trade that we put on for ServiceNow. That's the second time I've done that for ServiceNow. And that's the other thing that, talking about how there is an edge to play some names. Look at the earnings history for ServiceNow. If you don't think that there's a process and there's a, look at how well ServiceNow does after earnings. They consistently, and I'm not trying to jinx them, but if you look in the right column, they consistently beat. So that's how you kind of have to go through. So we did not do a big trade in Amazon. Why? Because this is what Amazon does on earnings day. Very inconsistent. They just don't do well. We were looking at another name, ILMN. Somebody asked me about this. And I said, look at the earnings history. Out of the last 6 quarters, they've gone down. So sometimes it just has to do with the management, just something with the stock. But some stocks, they just, even though sometimes you put out good numbers, the stock just goes down. So Qs are off a little bit. So where am I concentrating risk for the next, I'm trying to trade a little bit less. I did think with, Proofpoint, another name that reported, I think they're down. This name ran into another name that kind of ran into their quarter. So I think, this is in line with what probably it should be doing. But with ServiceNow and Microsoft, we've been seeing some call buying in some of the software names. I'm still long some Salesforce. I did take some profits in this name today. I think there was a little bit of call selling on the tape, but I'll continue to kind of looking at the names that are beating earnings. It's still software, so this is going to be an area that I said like a week ago that I was going to go back from my overweight positioning to maybe equal weight. But hey, part of the earnings season is listening to what these companies say. And I listened to the ServiceNow earnings call last night, and they're enthused. And most of the names that report in software, I don't want to say most, but I've listened to the Coupa software, the Okta earnings call about a month ago. Same thing with Salesforce. What was interesting listening to the earnings call is the analysts actually congratulate the company on the results. Very different. It was very different. I listened to the Xilinx call last night too. Nobody was congratulating them, but they get into the Q&A session, and everybody was congratulating. Very similar to when Salesforce reported their quarter. All the analysts, congratulations on your quarter, and then they have their questions are not that pressing, I would say. But a couple names that I added this name today. What is it? What was it? Let's see if I could figure out what it was. Another software name that we saw call buying in the other day. Let me bring up my CDNS was the name that I started today. We saw December calls yesterday, and the name was down a little bit this morning. So again, this is a long-term play. Stock's in a beautiful trend. I'm also looking at, which I was on Bloomberg on Monday talking about Berkshire. This Berkshire looks kind of primed and ready. I'm also, I've had on a financials position for about 2 weeks. Oh no, or maybe was it last week I put it on? Sorry, I get confused with time sometimes. But I've had on an XLF call position going out to January. That's finally in the money a little bit. But you can see Berkshire's trying to break out. If it closes the week, so I've been kind of patient with this, been watching it all week long. If it closes above 211.53, that to me is a close above value on the weekly chart. So that's going to be looking good. XLF, as I mentioned, is moving the right way. My calls are finally in the money on XLF, so starting to move the right way. We put on a trade in XLU, a little bit different yesterday. We were able to take a target in that one. Today, I wanted to take another target, just missed it, but maybe it can continue to get to the top of value. That'll probably be my exit point. DRI, we took another target in today. Nice setup. I sent this one Sunday night, got into this one on Monday. That one's been moving right way ever since we got into that one. And that's it. We'll leave it here. A lot more to talk about. We'll talk about more details in tomorrow's pre-market session, which starts every day at 9 o'clock. Have a great night, everybody. Go Giants.